Hey everyone, welcome back to Corporate Decoder, the place where we decode the fine print and see if companies are singing from the same song sheet as their shareholders. Today we are diving into C3.ai's latest report, and let's just say they're giving us a peek behind the curtain of their financial performance, and it looks like they are kicking off their fiscal year with some interesting updates. Alright, so on September 3rd, 2025, C3.ai dropped this report to let us know how they did in their first fiscal quarter, which ended on July 31st of 2025. This is essentially their quarterly check-in after the period ends to give everyone the latest on their financial health and what's happening at the company. And the earliest event reported is that same date, September 3rd, 2025. Now, companies like C3.ai, which is a big player in AI software for businesses, use these reports to keep investors and the public informed. It's like a status update on their business, telling us if they are making money, growing, or facing any major challenges. For those who own a piece of C3.ai, you likely hold their Class A common stock. You'll probably see it trading under the ticker symbol AI on the New York Stock Exchange. It's good to know what you own and where it's traded, right? This tells us their stock is listed on one of the biggest stock exchanges in the world, which generally means they meet certain standards and are subject to more scrutiny, which is usually a good thing for investors. The main reason for this filing, the crux of the matter, is to announce their financial results. They issued a press release, and that's what this report is all about. It's their way of saying, hey, this is how we performed in the most recent quarter, the one ending July 31st. This press release, Exhibit 99.1 as it's called in the filing, is the key document here. It contains all the juicy financial details for the first quarter of their fiscal year. Think of it as the official announcement of their financial score for that period. Now let's talk about what this means. Companies report their earnings to show how well they are doing in terms of making money, managing their costs, and growing their business. For C3.ai, this is especially important because they are in the fast evolving field of artificial intelligence for enterprise applications. Investors want to know if their AI solutions are translating into real revenue growth and profitability. Is their technology actually landing with customers and generating the kind of income that makes this a successful investment? What we don't see in this particular snippet are the actual numbers from that press release. Usually this type of report will have tables showing revenue, profit, maybe their forecast for the next quarter, and other key financial metrics. These numbers are crucial for understanding the company's performance. For example, if their revenue is up significantly, it means they are selling more of their AI software and services. If their profit is also up, it shows they are managing their expenses well while growing. Conversely, if revenue is stagnant or falling, or if their AI software and services, if their profit is also up, it shows they are managing their expenses well while growing. Conversely, if revenue is stagnant or falling, or if they are losing money, that would signal potential trouble or a need to re-evaluate their strategy. In a filing like this, you'd typically be looking at things like total revenue, cost of revenue, gross profit, operating expenses such as research and development and sales and marketing, and then finally net income or loss. Comparing these numbers to the same period last year or to the prior quarter gives you a clearer picture of the trends. Are they accelerating their growth, or is it slowing down? Are they becoming more efficient, or are costs getting out of hand? Think of it this way. If a company is selling more software, their revenue should go up. If their costs to deliver that software also go up, but not as much as the revenue, their profit margin improves, showing they are becoming more efficient or have pricing power. If their costs are rising faster than revenue, they might be overspending or facing intense competition that is squeezing their margins. This report, as filed on September 3rd, really just tells us that they announced their results. The real meat is in that attached press release. Without seeing those specific financials, it's hard to give a detailed analysis of their operational performance. However, the mere act of filing this report confirms they are adhering to regulatory requirements and keeping the market updated. What we can infer is that management believes these results are significant enough to warrant an immediate announcement. If the results were truly dire or exceptionally positive, it would be reported quickly. C3.ai, being a tech company, is often judged on its growth trajectory and its ability to capture market share in the AI space. So investors will be scrutinizing that press release for signs of strong customer adoption, successful new product launches, and a clear path to profitability. Based on the limited information here, the key takeaway is that C3.ai has shared its first quarter financial results. The attached press release is where the story truly unfolds. The future of many tech companies, especially in the AI sector, hinges on their ability to scale rapidly, innovate continuously, and demonstrate a viable business model that can turn groundbreaking technology into sustainable profits. So what's my take on all this? Well, without the actual numbers from the press release, it's like having the table of contents for a book, but not the chapters themselves. C3.ai operates in a very exciting but also highly competitive and capital-intensive industry. Their success will depend on their ability to translate their AI expertise into clear customer value and recurring revenue. The risks for a company like this often involve rapid technological change, competition from both established tech giants and nimble startups, and the challenges of selling complex enterprise solutions. On the opportunity side, the demand for AI solutions across various industries is immense, which presents a significant growth runway if they can execute effectively. Ultimately, the devil is in the details of that earnings release, and those numbers will tell the real story of C3.ai's performance. Alright, that's our breakdown of this C3.ai filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more real-time discussions and insights. Thanks for watching. See you next time.